some of you know I'm now in appropriations and we're hearing the governor's budget. So a lot going on today. And I understand there is, the governor was here before you yesterday talking about an issue similar to this, very similar actually. So how did we get to what is now House Bill 1186? At the end of the 2023 session, there were a couple bills that the House considered, and some of you may recall there was a school voucher bill that I got up on the floor and opposed. And I said, I'm not just voting no, I'm going to come up with an idea to maybe make that concept a little bit better. And we also had a property tax bill that was merged into income tax relief, and the House really never got a chance to debate property tax like we are this session or we have in the past. So I made a commitment that I was going to look for solutions in the interim. And I started that work in June of 2023. And I want everybody on the committee to know where this started and where we're at now. There were 3 elements to that bill that was being considered and ultimately was drafted as a request in December of 23. The 3 elements were property tax relief, 60 mil buyout for all property types in North Dakota. Part 2 was a 3% cap on the property tax revenue for all political subdivisions and municipalities, not including education. And part 3 was an 80% per pupil funding for private schools if they met certain criteria. And I put that out, actually called about 20 legislators and said, hey, this is coming. Put it out to the public and emailed everybody that was serving at that time in the legislature and said, this is what this does. That bill, 60 mil buyout, and I say buyout, not buy down, because the 60 mils are what we mandate be levied on property locally. The cost of that was estimated to be $757 million. Within that bill, I also included a 4 and a 4 increase in the per pupil payment. That was an additional $180 million. So here I am in Minot claiming to be a conservative and suggesting spending coming into session of about $1 billion. And many of you and many others said that's too much. Measure 4 was, now when I said in June of 23, that's when the announcement was Measure 4 was they were approved to go collect signatures. So I talked to some sponsors of Measure 4 and said, hey, this is going to happen as well. I'm going to try something. There wasn't any pushback or anything. And I said I would only introduce this bill if Measure 4 failed. Measure 4 passed, it was a moot point. So in February of 24, I went public with that idea and had a lot of concerns from people saying that's too much money. And had other people saying, well, if we can do 3.15 billion, we could do 1 billion. So it was coming from everywhere. I brought it on myself. I was actually accused by a lot of people of trying to block Measure 4. And that was, in fact, if you go back and look publicly, I never advocated against Measure 4, just said, here's the solution if that fails. So through a lot of listening and learning and discussion, this bill continued to get amended. What you have before you is actually version 6. So this wasn't just talking to legislators and taxpayers. This was living in the real estate industry for almost 30 years. And with what we did with the tax credit last session and how it impacted property sales and the mindset of the citizens and residents of North Dakota. So I was looking at this from many different perspectives and then get elected to the school board in Minot. So now I've got a new perspective of school funding that I needed to understand, and I had to understand it quickly. I want to make clear to our committee and to all legislators that residential property in North Dakota is different than primary residence. In my world of real estate, residential property is 4 units, a fourplex or less. You have the ability to finance using certain type of financing, lower down payment, for instance. On residential property in the real estate world, 4 units or less. But in North Dakota, through my research, I learned it was 3 units or less in our state. not financing, just what we classify as residential. So a triplex, a duplex, a single family home, a condo or townhouse or a mobile home. That's residential. Then commercial is a fourplex up to 48 plexes that you see, and gas stations and retail stores and other. So I want to have the delineation between residential property type and primary residence, which is a use that the owner places on their property. They live in it. They claim to live there. This is the subtle but important difference. Originally, the state, we mandated 185 mills to be levied locally for K-12 education. We've chipped away at that, and it's down to 60. Some districts for a while weren't quite at 60 because their valuations were going up so fast that we put in what's called transition minimums and a 12% increase, so that if your valuations rose so rapidly that your taxes would go up to meet the 60, the state stepped in and funded the difference. My understanding is this is probably the last year, 2025, that any district is taking advantage of those transition minimums. Prices have leveled, and that 12% within that cap of those 60 mills, everybody's levying the 60 mills is my point. After passage, if this were to pass in some form, the state no longer looks at those 60 mills that are gone, at least for residential. All we are left to do is fund the per pupil payment through the funding formula with some number. And every last session we did a 4 and a 4 increase. Presumably every year we would look at increasing that in the per pupil payment. So there would be no concern to go back and say, well, what are the 60 mills going to cost in 2028? They're gone. We took them over. And I say buy out, not buy down, because those mills would be gone. On the 3% cap, this, I heard people say, why'd you pick 3? And I said, I picked 3 to have the debate. It seemed like a practical place to start. Now I've heard a whole lot of other bills are really focused on 3, so maybe it was the right number, but I did have people say, what about consumer price index? What about that plus 1 point or 2 points? That makes sense. A number that limits the local political subs from raising property taxes from the revenue they derive in their budget on property tax more than 3%. So they have other forms of revenue streams, special assessments, fees, sales tax. Schools don't have that. Schools do have an additional 10 mills they could levy on their general, an additional up to 12 mills for special funds, and they have 2 other sources. One is if their voters gave them a building authority fund, which is 10 mills, and the other is if the voters said build a new school and we'll bond. So this bill doesn't cover those locally assessed mills. It buys out the 60 mills that we mandate. Back to the 3% cap, again, this is only on the portion of their budgets that's collected in property tax. If the local political sub would like, the voters would be able to approve an increased levy authority. And this bill says it has to be 60% supermajority. There's language in the I didn't even realize this, depending on the size of your community, if you want to increase levy authority for schools, there's a 50% threshold, 55% threshold. This says for the political subs, if you want additional levy authority, not bonding, additional levy authority, ask the voters, and if you get a supermajority, it passes. There's also a cap. So the ability to carry your unused cap forward on the 3%. So think baseball. If you have a salary cap and you don't hit the salary cap and you want to sign that free agent next year, you hold back the money and then you go ahead and sign the free agent, still stay under the cap. So this is a carry forward of 1 year. I don't know if that's the right number. I heard another bill has 5 years. Maybe 3 is the right number. I actually would leave that up to the committee to decide. I think it's important that wherever we go, that carry forward of unused cap needs to be addressed by this committee. I was looking at doing credits in this bill early on. I didn't like how we ended last session with the credits, but that's what we were given. So in the industry, that became a problem. Many of you probably heard that because somebody held their property in a trust or a life estate, they were advised by an attorney or their accountant to do this. They didn't get the relief that we gave them. They weren't eligible because of one word, and it was individual and not person. So I think we're correcting that this session, but that was one issue on the credit. There was another problem with proration. It didn't prorate when somebody closed on their sale in the middle of the year. If the applicant applied for the credit and then sold their property, the credit went away, the new owner didn't get it. I think we can fix that this session. I mentioned the individual versus person. One of the concerns that I've got with doing a credit in the bill that I was looking at was, how do you reaffirm that every year? How do you recertify that credit? Primary residence is a use, not a class. And so we likely would have to ask the residents of North Dakota to take action every year to get whatever credit we would provide them. So to me, the buy down or the buyout, which reduces your property tax, is there already. No matter if property changes hands, the owner doesn't have to take action. The use of the property changes through the year. If somebody owns a primary residence and they go to sell it and the purchaser doesn't make it their primary residence, they use it as a rental, a second home, or whatever, that how do you handle a credit when the use changed throughout the year? And when do you know? And the other way, what if somebody that owns a rental property sells it to somebody that wants to make that their first home? The credit isn't there. So that new homeowner has to take action 2 or 3 years from now if we do credits on primary residence. How are they going to know to do that? I have concerns about how we handle escrow. If we do credits, how do we know what the escrow balance is going to look like at the end of the year and what your escrow company is going to do? Are they going to lower your house payment? Are they going to refund your money? Are they going to apply it to a future liability when your insurance went up? I think it's much cleaner when we just reduce the tax liability. How about bonding? If we're going to, and I'm looking at this as if we're going to give a credit that's going to continue to escalate, what's to hold back a community from saying, let's just bond everything if we get the money back from the state? I think that needs to be addressed in this bill or any bill, that there's limits on if we're going to provide credits, it doesn't apply to a locally made decision to build a school or a water treatment plant. If we take the credit to its logical end, if it builds and builds and builds, and I've thought a lot about this, can we get to a point where the property tax liability is zero, where the credit that the owner receives is equal to their liability? Can we get there someday? I don't know, mathematically, maybe. But if we don't, this is my biggest concern and why I excluded credits out. We are going to stifle the real estate market where it is most important, and that's the entry-level and mid-level homes. And I'll tell you why, and it's happened already. 5 years ago, we saw an interest rate market where it was 2.5%, 3% interest. So everybody bought or refinanced. And here we are 5 years later, where the owner of that property doesn't want to sell their entry-level home and move to a mid-level or more expensive home for 2 reasons. The price of the home is higher and the interest rate is higher, in some cases double or 3 times. Why would you trade a 2.5% interest rate for 7 and a more expensive home? So those homes aren't hitting the market. And we got a whole bunch of buyers that want to be first-time home buyers and can't get into a home because there's no inventory. And how many of you have heard affordable housing is an issue? The market created that. And if we do this and we only take it to the mid-level homes and we say no property tax on those homes, but there is on other, now we've just doubled the crisis, because that homeowner won't sell because they don't have a tax and they have a low interest rate. So if we do credits, we need to take it to its logical end. And if that's the direction, I didn't see the opportunity to apply that going forward in this bill. So that one is a huge concern. This isn't a realtor thing, by the way. This isn't me saying we want to sell houses. This is people saying I want to own a home. And mathematically, when an interest rate drops by 1 percentage point, your affordability goes up by 10 points. So if you go to your lender and you're approved for $300,000 at 6% and the interest rate drops to 5%, your affordability just went up to $330,000. So a 1 point change in the interest rate over 30 years impacts your ability to borrow by 10% up and down. So the rate's 3% and you got to sell your house and go buy one at 6%. It has a huge impact on affordability. Owners of real estate generally have a 17 times higher net worth than renters. We want people to own homes. So we want to incentivize and not just target one part of the market to hurt the rest. And I think that if we stopped halfway through a commitment on credits, it's actually going to drive the very few houses in the entry level. The price is going to go up because the inventory would be so low. What this bill does is, in most instances, and in deference to the chairman, he did call me and say this doesn't work in my district the way I suggested. In most districts, it's 24 to 40% property tax relief immediately. If we're looking at reclassifying property, that might take a year. And then once we have that pool of homes, then we apply the credit, which would show up, by the way, on your property tax statement in December of 26, after the November election. I think what this bill does is it leaves some local taxation control. It does not apply to ag land and commercial. If you wanted to do that, you wanted to do 60 mills across the board, write that number down, about $757 million. This one should be about $300 million in estimates. The estimate, the $300 million, was about $145 million in the first year, and then they took an average of a 6% increase in the price across the state and said the second year would be about $155 million for a total of about $300 million. And then it's just up to us after that how we fund education. I would ask that if and when, I'll say it with confidence, if you choose to amend this bill, ask or tell me what you're looking at doing, and it's up to you, not me, once you've got it. But a consideration might have already been made in version 1, 2, 3, 4, and 5. So if you want to do that, I'll tell you, what I think it would do to the bill. There's a lot of options before you. I've heard a number of people say there's over 50 property tax bills. Ideally, we'd have one big one. You get it over to the Senate, have them pass it. We would have property tax relief and we'd spend what's left. But I don't know how you do that as a committee. You got a lot before you, and some things that'll be proposed to you would fit in here. For instance, assessments. I think if we change how we value a property based on some other metric, that still works in this bill. Because once we buy out the mills, they're gone. And now we're just funding education and we're capping political subs. Generally, I want everybody to know I'm committed to property tax relief and reform. So I'm going to support what is best that comes out of this session. I'll give my opinion. Hope it matters. But I put a lot of time and effort into this about 14 months of going around the state and talking to people. And the evidence of 6 versions is, okay, there's an idea that changed. And I think it's going to change again. But I wanted it before your hands. And with that, Mr. Chairman, I'll stand for any questions. I'm all yours.
Questions?
Oh, Mr. Chairman, before, I didn't even go section by section. I could do that with Cliff Notes, but each section is amended the way it is to achieve what I described.
Representative Louser, why don't you go through it quickly?
Okay.
That might help the committee members.
All right. Section 1 basically says that the mandates that the school districts file their taxable valuation and their levy certifications annually. And if they don't, if they don't get their state aid, if they fail to comply. Section 2 defines the baseline funding as the basis for determining the state aid, and it establishes the per pupil payment levels for 23, 24 and subsequent years. So it does say that the 60 mills are applied to all other sectors. So instead of taking the 60 mills off, we're saying specifically the 60 mils do apply to the other types of real estate, not residential. Section 3 is adjusts the minimum required local property tax to 20% of the state average valuation per student. This is the one I was slightly confused on, or wasn't fully clear on. And I know that there's people here that could address that regarding school funding, but this is regarding the funding formula. Section 4 limits the property tax increase for non-school taxing districts, so that's your political subs, and caps them as discussed earlier. Section 5 specifies that the school districts cannot increase mill levies for general purposes beyond the authority that we give them unless it's approved by the voters, and adjusts the mill limits and clarifies voter approval for that additional increase. Section 6 establishes specific allowable mill levies for school districts. So we're talking the general fund, tuition, miscellaneous purposes. It has that separate 10 mil cap for their general fund, as I mentioned. And then the additional 12 mils for miscellaneous, which generally is being used for transportation. And almost every school district is levying those extra 10 and up to 12. Well, I shouldn't say almost every. I think actually about half are at the max. Section 7 caps the property tax levy increase at 3% unless the voters approve. And this is originally I put 1 year in, didn't make a lot of sense. If you're going to go to the voters and say, give us additional levy authority, doing 1 year didn't make sense. So this is giving them additional levy authority for 5 years. You're not going to spend $20,000 on an election in a small community and only give yourself levy authority for 1 year. So this goes up to 5 years. Section 8 adjusts how property tax relief is displayed on the statements that we're sending out to our property owners. Section 9 repeals the provisions that are related to the outdated state aid adjustments and the funding calculations. And Section 10 is the effective date. So all of that language is there to achieve what I've described as the intent of the bill. Does that help?
Questions? Representative Machenbacher.
Thank you, Mr. Chairman. Representative Louser, yesterday we heard the governor's plan for property tax relief, and could you just give us a kind of a quick thought about what advantages do you think your bill has over what the governor has proposed?
Yeah, Mr. Chairman, Representative Machenbacher puts you in a tough spot to say, do you like the governor? I like his proposal, I do. I spent a lot of time putting this together, and a lot of people saying, you're just doing it for a distraction. And then you come to the session, don't introduce it. I met with the governor last week and I said, I've got concerns. Can you answer a whole bunch of questions that I have? And he answered all of them, and I liked his answers. And I had this bill ready to go. I wasn't here to hear what was presented to you yesterday. I don't know if what he had changed between last week and this week. My biggest concern with that is the sustainability and the perpetuity of providing that credit so that it reaches every property owner. In that case, it's primary residence. And I think it's going to take us a year to create the primary residence class type of property. And then we are asking our property owners to reaffirm that every year. And we're putting it on them. And I think what's going to happen, and again, I want to say he put a lot of thought into that. I met with him twice in the summer and was hoping for support on the buyout. He landed on the tax credit because I think the path ultimately is zero tax liability for the home that you live in, I think. And if we can get there, that's great. And if we can get there without raising property taxes and all the other property types, even better. I think it's going to take a while to get there. And I just fear that at some point the legislature is going to say, we're done. We're done providing the credit, and then the fallout on the real estate market happens. So if we can commit to that long term, excellent. I think it's going to be hard to create a property class or type out of a use. And by the way, I don't want the phone calls from my constituents saying, I forgot to reaffirm my property this year as a primary residence. How come I don't get the credit? If that credit's $4,000 someday and somebody forgets, they're going to be calling us.
Committee members, just a friendly reminder, I think we said we're done in 2015 after we passed social services, and look, here we are again. So I don't know if we're ever done once we've started this program. Representative Doctor.
Thank you, Mr. Chairman. Representative Louser, so with your bill, it would start in year one, because I've been told because of how the formula works that it wouldn't be able to be implemented till year two. Is that not accurate, or is that in your conversations with all the work you've done? Can you explain that?
Yeah, Mr. Chairman, Representative Doctor, that's where some of the confusion comes. I think we provide the relief. It goes into effect. Well, you can see on Section 10, starting in the 2025 tax year. So we provide the relief. We buy out those mills, and that shows up on your 2025 tax statement in December, payable either this calendar year to get the deduction or by the discount period in February. It goes into effect this year upon passage. Signed by the governor August 1st. The relief applies to this calendar year.
Thank you, Mr. Chairman. So even though with the form, and so you're saying it can be accomplished that we would get it right away, not have to have it, relief would be in 2026?
The relief would apply to your 2025 tax liability and what's owing,
26.
payable in 26, and worked out in the funding formula for the K-12, which is, a 2-year look forward.
Representative Toman.
Thank you, Mr. Chairman. Representative Louser, during your initial presentation before the walkthrough, you talked about excess levy authority. And I was just looking through there that we're not increasing or adding, we're just keeping it at the 10 and 12 mills, or are we adding more levy authority?
Oh, the increased levy authority I was referring to, Mr. Chairman, Representative Tolman, was the other municipalities to be able to ask their voters for additional levy authority for up to 5 years. I believe we already have that in existence with a supermajority for 20 years. It's really for bond issues for schools. But that additional levy authority is for the other municipalities.
And then the other question was on the tax statement. So we're buying out those 60 mills, but people are still going to see 10 and 12 mills on their tax statement. So is that going to be in that saying, hey, this is still, because it's designated as the excess authority on that statement?
Mr. Chairman, Representative Tolman, the statement would look the same. Really what we're doing, you're still going to see the K-12 portion of the property tax that's being levied and collected. What you're going to see is the year-over-year decrease. So from 24, 25, and 26, we got a 3-year look back on our statements. That's where you're going to see the reduction, and you're going to see it in that line item.
Representative Dressler.
Thank you, Mr. Chair. Representative Louser, as a school board member, how do you think bond votes will be impacted by an entire section of the public that is paying $0 on their home, and they're now asked to build a new school, that sort of thing, whereas you have other classes that are still will be left holding the bag?
Wow. Mr. Chairman, Representative Dressler, I think that if we get to a point where we have a net zero tax liability, and it won't be that because there are local decisions, but if we get to a point where that happens, we are likely to see a lot of bonds placed on or a lot of questions placed on the ballot and passed and then paid for locally, I hope. Because if the credit doesn't say that happens, that stays local, we're going to have to come back here and tell people you can't do what that community did 2 years ago. I think there's going to be a lot of questions on the ballot because your liability is going to drop. So why not get a new building for $100 a month on your property tax? I think it'll increase. It's not my intention as a school board member to do this and then go ask for a bunch of new buildings.
Representative Porter.
Thank you, Mr. Chairman. Representative Louser, so I'm clear, any of the bond issues that would be voted on, would they affect all property classes or would they only affect the leftovers that are still paying?
Mr. Chairman, Representative Porter, they would affect all property as they do now. We don't change the language. It would impact everybody.
Okay, if I may continue. Thank you, Mr. Chairman and Representative Louser. On the fiscal note, I've got some concerns that when I look at it from 30,000 feet, I see $292 million. But that 292 doesn't count what we're going to put in this session. And then that makes the 27-29 number change. So do you have an idea inside of the education formula bill, what we're putting into education so that that number becomes more realistic in my mind and then what it would be in 27 and 29?
I don't want to answer, Mr. Chairman, Representative Porter. I want to get that number wrong, but we did a 4 and a 4 increase last session. If we were to do that again, that number goes up by $181 million. So you take we'll say 300 million currently, you add that 300 million to what we're already funding in K-12 plus $180 million if we do an increase. So the base number, I don't know. I should.
Then
It starts with a B.
Mr. Chairman and Representative Louser, then the 27-29 cost to continue goes up by 8% over the 400 or almost $500 million. It should go up by 8% to continue it.
Mr. Chairman, Representative Porter, that would be completely up to the legislature through appropriations, how we increase the per pupil payment. So we did a 4 and a 4. We've done 3 and 3 in the past. We've done staggered, we've done pay raises for employees at 6 and 4. We did 4 and 4 for education before. So the number, the subsequent number going forward is rolled into the per pupil payment in one number as opposed to 2 or 3 numbers collectively. So I think this goes back to the school board, then I'd like to see a 4 and a 4 increase. And that number would be over 2 years would be essentially an 8% increase over the 300 million that this bill does. Does that answer your question?
Continue.
Thank you, Mr. Chairman and Representative Louser. It gets partway there. There's always a cost to continue. That's a multiplier inside of there. So it's really not just 4 and 4. There's bringing the basis forward. So it would be close. Just if we're using 4 and 4, 27-29 would be much closer to 700 than it would be to 500.
Well, Mr. Chairman, Representative Porter, again, we're not in the future. We're not looking at the value of what that mill is locally. We're saying we bought out the mills. Here's the number. The $300 million goes on top of K-12 per pupil. And then subsequent bienniums, we just look at a total per pupil funding in the funding formula we've created. So if we can do a 2 and a 2, there's no cost to continue because those mills are gone. It's rolled into the formula.
Mr. Chairman and Representative Louser, the mills may be gone, but the money is still required. So there is a cost.
Yeah.
It's not free. You can't take them away and then say that it's free. There's still a cost to continue the program that this creates.
Yep, I agree. And that's where I think it's up to us to say, how much can we afford to increase that every biennium?
So I guess one other question, Mr. Chairman and Representative Louser, why cap the political subdivisions at 3 and not the schools? Because what they're still left with is property tax up to 12 mills that they can assess me.
Yep.
Why should they get to live inside of a different world if we're paying now 100% of their mill rate, and they've got 12 left, why should they get to live in a different world than the city or the county or the park board?
Yeah, good question, Representative Porter. Mr. Chairman, they already live in a different world. We've done that. We've put them in a different part of the century code. If we were to say a 3% increase on 12 mills, we're not even talking about a mill. So 3% increase, if they're at 10, is 0.3, so they go to 10.3. So in the schools, we've said your cap is the actual mills that we're allowing. And the other budgets, we're saying your budget increase, because they have other funding sources in other municipalities or other political subs. Schools are already different. They're living in a different world. So we're saying you can do 10. Maybe in a subsequent session, we say that 10 might be 11 or 14 or whatever, but we are already telling them what their cap is. It's a hard cap on mills. So if we said we're going to apply the 3, it's 3 against only 12 or 10 mills. It's very, very minimal.
Thank you, Mr. Chairman and Representative Louser. So if we take that mentality moving forward, or even off of this bill, then should we do the same with other political subdivisions that we cap their mills? Should we write it that way, that we say that the fire district and the ambulance district and the park district, because we cap their mills, that you're not living in the percent world cap because we've already capped you? Is that to make it fair for everyone? We should be looking at that?
Well, Mr. Chairman, Representative Porter, we could do that. And then we're going to take years and years to get a funding formula that balances the inequities that we had to do for the schools, for things like school districts that have English as a second language. A large portion of their kids are in special needs or certain classes. And the inequities in the school districts, we have over time perfected a funding formula. If we went down that road, we'd have to do the same thing for in my opinion, for the municipalities. We'd have to account for the size of the district. We'd have to account for services they already have. That's why they have other revenue sources to be able to fund those budgets. We could do it. It would be a heavy lift.
Representative Tolman.
Thank you, Mr. Chairman. Representative Louser, following Representative Porter's questioning, we're still having the 60 mills on non-residential property. So they're going to bear a larger burden, and Representative Dressler mentioned it as well, if we don't cap growth. And so they'll be bearing a larger burden of that, and follow that logical conclusion to the bond issue, which they pretty much all get passed anyway, except for several districts. In my district, we just passed a $100 million school and nobody thought about it. And now when you're not paying those 60 mills, you're going to ask for a $200 million expansion on that school, and people are just going to raise taxes on commercial property owners. So why not a cap there, or what would that look like?
Well, again, Representative Tolman, Mr. Chairman, you're right to say that the people that are like the vast majority of the voters that are going to the polls are going to see, if we do residential property buyout of 60 mills, are going to see a substantial reduction in their property tax and likely more inclined to vote yes on a bond issue. That's true. I don't necessarily agree that the burden is going to shift for the tax liability. The amount's going to stay the same. It's just the other portion of where those 60 mills came from doesn't come from residential. It comes from the state. So we're not shifting the burden to be a higher portion of the budget to the non-residential property owners. But I think the effect is, you are right, that the likelihood the commercial property owner doesn't have a vote. The citizen, the resident of North Dakota, the citizen that has lived in their property for 30 days has the vote. They may own commercial property, they get one vote. So you're right to say the effect may be that bond issues would be more likely to pass because the vast majority of those voters would have seen property tax relief on their statement. But I don't dispute that. I mean, I would like to say that we have a perfect bill. To Representative Porter's point, this isn't perfect. I would like it to be, and after a year and a couple months, we're close. Closer.
Representative Louser, where I struggle with this concept is, there's already a natural inequity amongst property classes on education funding just because of where you're located in the state and where your school district is located. In my home school district, the auditor told me a few years back that 93% of the tax value is ag property. If you go out to McKenzie County, I'm assuming centrally assessed is paying the bulk of it and commercial. And so when we already have those inequities amongst property class and the people that are paying them, if we go this direction, doesn't this essentially pile on to the inequity?
Mr. Chairman, I called you by two names, Representative Hedlund. I don't know that it piles on because we are limiting their increase, but you're right. This does not provide additional relief to the ag assessed properties. There is relief if you have a residence, a homestead on the property, a farmstead on the property. That's existed for a long time, but the balance of the land that you own is still being taxed. So if you want to go down that road, the number for 60 mils for everything, 757 million. I would think if I heard that, I'd say, well, how about 30 mils for everything? That kind of defeats the intent of the bill to say we are mandating somebody else levy the tax. This bill says we're not going to mandate anymore that you levy it. We're telling you we're just going to pay for it. So that's why I have the 60 mils. It would have been easy to just say 20 mils for everybody. And quite honestly, it's in your hands. Maybe you do that. If this is the route we take, if we do credits, maybe we have to look at something for other properties that aren't getting the relief. But you're right. I mean, I heard from people saying, hey, great effort, but it doesn't impact me at all. And I was quite honestly surprised to hear 93% in your district. You told me that months ago. This doesn't apply to ag as written.
Well, I guess the point I'll make to you is when we discussed on the first phone call, when you called me last February or whatever it was about your initial concept, I do think that there is fairness in applying it across all mills. And if it's 750 million, I think I've heard a number being tossed around. That number's up to 900 million now. I guess I don't know what the real answer is. To me, is a better concept than dividing the classes and putting the burden of local.
Well, Mr. Chairman, I appreciate the efforts that are being made here, and there isn't a magic bullet, but I mean, if you're going to hear from constituents saying this doesn't apply to me, this isn't right. So that's why we're here.
That's when you deal with property tax at the state level. Representative Doctor.
Thank you, Mr. Chairman. Representative Louser, what about, you hear about this 12-plex strategy, on a 12-plex? You hear that? Have you ever had anything with that?
Are you talking about living in one of the units as a 12-plex and taking the credit, or?
Just, because you talked about the 4 and less, 4-plex or less and everything. I think there's been some concept out there about the 12-plex as, a strategy towards the taxing.
Making that residential, you mean?
Yes.
Nobody's approached me with that. I don't think making a 12-plex residential makes sense. You can live in one of the units, but that is commercial property.
Okay.
For all purposes in the industry, anything over 4 is a commercial property. And I've had people say, well, your residential property, you could own a single family home as a rental and that's income producing. It is when it's rented, maybe, until you have repairs and expenses and a vacancy, and then it's an expense. There's a risk that you take. That risk gets dissipated over 12 units on a 12-plex, and that's why the bigger, that's a commercial investment instead of residential. You can still live in it, but residential, as we define it, is 3 units or less. I think if it's going to change at all, it should only go to 4.
Any other questions? And we're sorry we've kept you up there. I
No,
don't see any questions, but could you just respond to something that you had mentioned earlier? And that's a discussion you had about the unintended consequences created with the other bill on the sale and marketing of properties.
Oh,
You said that you had asked that question of the governor and he responded. Were you satisfied with his response, and can you share it with us? Because we have to know what it is.
I think I understand the question, Mr. Chairman. I think the question, and I had asked the governor, what happens if we're doing a credit and it increases every year? I think that's what his intent was. What happens in the middle of the year when a transaction occurs? How does that credit get prorated between buyer and seller? Does it depend on if you sell it in February versus November? How does that work? And more importantly, what if the use changes? So the credit would apply, but the use changed from primary to investment, we'll call it, or vice versa. I think under that process, we only levy the credit once a year. So somebody might benefit from the credit when they don't deserve it or aren't entitled to it because they're using the property that was formerly primary as secondary, we'll call it. I don't know how you fix that. And maybe it's okay. Maybe the answer is that's okay. The vast majority it wouldn't apply to. Every once in a while it'll hit us. I wasn't too concerned about it because if the mentality is we're going to reaffirm every year, then that kind of fixes it. But we're placing the burden on the property owner to make that affirmation every year.
Can you also just respond to you had mentioned that properties are not being exchanged now because of interest rates and how that kind of manipulates people into not wanting to make that upgrade because the cost associated with that new purchase changes things. How are we supposed to deal with that? I don't think any negative impact like that, I don't know that we can even understand. And I don't know how you can legislate for it, but it certainly seems to me that is a pretty negative consequence of what we've been discussing.
Well, Mr. Chairman, that's the market. And we've had high interest rate environments in the 80s at 18%. And the transactions that were occurring then were contract for deeds. You weren't going to the bank and getting a mortgage for 18. You were selling buyer to seller directly. And the seller, if they're willing to take the risk, would sell a property to get around that interest rate environment, would sell it directly and carry the note back and hope that the buyer didn't default. So in a high rate, the market moves faster than what we can do. I'm not saying that we as a state or any government should get involved. I'm saying that the low interest rate environment that we experienced 5 years ago, ultimately, when we got to 6 and 7% interest rates, this was going to happen. My concern is if in those properties we further add the fact that they're not taxed, but the next step up, whatever that next step up is, let's use 300,000 as the next step up. That property has a property tax. You've additionally disincentivized the entry-level homeowner from selling their property to somebody who wants to buy one and moving up because their payment's going to go up because the price of the house is higher, the interest rate's higher, and now they have tax. And the promise of that tax might go away at some point. maybe. I got to tell you, I was impressed with what the governor came up with. I considered a few of those things. I did not have a funding source. I think he's got a good plan for that. I wanted to give you an alternative to consider. And I think he's respectful of that too. He has been.
Anything else for Representative Louser? Well, I really appreciate it, Representative. You did pretty well in front of us. You took some tough questions, so appreciate that.
Well, I was nervous when Porter's in the room. He likes to hammer me.
That's a natural occurrence amongst. No.
Thank you.
Thank you. Thank you, Representative. Further testimony in support of House Bill 1168.
You still go to the games?
There we go. Good morning or afternoon or whatever it is. For the record, my name is Dr. Amy Kopus. I serve as the Executive Director for the North Dakota Council of Educational Leaders. I'm just here to provide a little bit of support for the bill, primarily because there's quite a bit of language in here that's really nice. And however this all shakes out for property tax relief, there's some language in this bill that works really well for schools. And I want to highlight some of that. And some of it plays into what I talked to you guys about yesterday when I was in here talking about the bill that was primed by Representative Nathy. Representative Louser worked with the NDCL's legislative focus group quite a bit and through the 6 iterations of this bill. And we worked through some of the pieces to make sure that it was cleaner for schools. So some of the things that I talked to you about yesterday have been hammered through, and we were able to get to a place where we were able to put the things in place that we learned from the tax relief provided in 2013 and the lessons learned. We were able to put the caps in place that we learned we needed to have in place so that the tax relief you were provided was maintained over a longer period of time while still keeping in place the funding formula for K-12 education, keeping the zero cap that I talked to you about yesterday in place for K-12 education, and the moving forward, the decision-making process in place with the legislature with regard to the per pupil payment that we discuss every legislative session. So it's different for schools, as I indicated for you yesterday. And we need to be treated differently because we're not a municipality. We do not have the legal authority to assess fees or to assess specials. Our authority is, if we think about it this way, and I was thinking about it last night, how could I provide a better example for you? And if you think about schools living under an umbrella or a baseline, so we have a baseline, and underneath that baseline lives our mill levy authority. And that's where we live and we flow because everything that we do is under our per pupil or under our per pupil model. And we ebb and flow on the number of students that we have. And within that levy authority, we live in the limited authority that we have. And that is that 60 mills, the 10 of general education, and the 12 miscellaneous, as I indicated yesterday, that we utilize to fund if our numbers change, our transportation, our special education, and some of those miscellaneous things that we have. We also have that limited building fund that we use to manage our school buildings so that we can handle renovations, we can handle the ongoing things that we go on with our buildings, keep making sure our roofs stay good, making sure our windows stay well, snow removal, all of the things that we do for deferred maintenance with our building. We worked really hard, as I indicated yesterday, with Measure 4. And one of the things, quite frankly, we talked about this bill I personally did on the radio and in the media, talking to the public of North Dakota, saying there's a bill that's being worked on right now out there that's a potential solution to the problem of property taxes. I knew that there were going to be others, and we talked about that yesterday. Now, however the sausage comes out at the end of session, and I hope it's delicious at the end, I'm sure that there's going to be pieces of many bills that come together to get to the solution. But there are pieces of Representative Louser's bill that are really good. I agree that the obligation to apply every year is really risky. I know between the 3 education associations, we worked really hard to get out to our constituents to remind them to apply. I saw Indy United doing it. I know school boards did, and I know we did. We said, remind your people in your school buildings to get out and apply for their tax refund because we don't want our patrons mad that they didn't get their tax relief. And we know that some of them forgot. So I worry about that piece too. there's basically just, we want to remind you, it's important that there is a vast difference. Even though we're all political subdivisions, we're funded so vastly different than the other political subs. Representative Tolman, I know that you had that question about the excess mill levy, and I wanted to let you know that it exists already in code for schools in a couple different ways. So there's the 60 mil that we have to do for school buildings, but schools have been already able to request an excess mill levy authority to from our patrons on our basic mills as well. So if you are, and I'm going to look this up for you real quick, I had it pulled up. And it's in section 57 of code. It's section 57-15-14. So if you're a district with a population over 4,000, we can ask for a specific mill levy increase. And that's at a 50% majority right now. And if you're a district under 4,000, you can ask for a specific mill levy increase with an approval of 55%. So let's say you want to ask for 3 more mills. And that mill levy increase, I believe, and correct me if I'm wrong, gentlemen, I think it's a 10-year request, is it not? I think. And I think right now we have 2 districts in the state that have our current approval. Fargo and Williston, I believe, are under a current approval. It's very rare that it's ever asked for, and it's usually for a very specific reason that ever anybody asks for. But I just wanted to address that so you knew that schools already had that. Representative Louser had asked about that with the other political subs, and I said, well, schools already actually have that authority, so it would really make sense for the other political subs to have that. So with those particular points, I just wanted to play a little bit of cleanup on 1168. I would stand for any questions you might have of me.
Any questions for Dr. Kopus?
I really appreciate your guys' time. You can catch me in the hallway anytime.
Well, thank you for your testimony.
Thank you.
Further support.
Mr. Chairman, members of the committee, my name is Amy DeCook. I'm the Executive Director of the North Dakota School Boards Association. What I had just handed out to you, it's not testimony. I'm not going to read through it. It really is in response to the request for information from the committee when we were discussing the governor's and Representative Nathy's bill yesterday. I just wanted to, and I won't go through it in detail. It's more for your perusal as we continue these discussions about property tax relief and reform. But I just wanted to let you know, DPI every February releases what's called school finance facts. You may have been aware of this from prior sessions, but it provides a really nice summary of school funding for the school year. And in particular, it provides detailed information about mill levy for each school districts, as well as their valuation, and then how that fits into their larger funding and revenue and expenditure for the year. I did not print out the entire document because it's 74 pages. I can provide it electronically, however, to the committee, and I'll go ahead and do that. But I just wanted to highlight that this information is prepared, and you can see what each district is levying and for each mill category as well. I did provide to you yesterday, I forgot to highlight this, attached to my testimony yesterday for the bill we discussed yesterday was the levy limitations for school districts that the tax commissioner publishes every year. So though all of this combined can give you some data to look at in terms of how districts are levying, and we'd be happy to translate any information that's in there for you if need be. The other document I provided is the school funding litigation information that the Chairman Hedlund asked for yesterday. This is actually prepared for was prepared by Legislative Council, and it was provided for the school funding task force because it's always a subject when we're looking at the funding formula because those two cases looked at adequacy and equitability in terms of funding. And so those were the cases that I referred to you yesterday. With that, I just want to reiterate that in terms of Representative Louser's proposal, it does recognize the difference that K-12 education and public school districts in terms of funding and revenue sources compared to the other political subs. And so we like the proposal a bit better in the sense that it does consider school districts' unique position and the fact that we are constitutionally mandated to provide our services. With that, I'd stand for any questions, and I thank you for your time.
Questions? Looks like you're off the hook. I don't see any. Thank you for your testimony. Further testimony in support of House Bill 1168.
Mr. Chairman, members of the committee, my name is Aaron Burst. I'm with the Association of Counties. I probably should have said this yesterday, and I want to save you a bunch of time. We support ideas to try to reduce the property tax burden. We are open to discussions on budgetary limitations. I don't want to get up on every 60 bills that you're going to do. So can that just cover me until we finally see the dust settle? The only thing I would suggest, and we're getting a lot of people asking us for data, we can get a lot of that data, but it would be nice if this committee all sent that to you, Mr. Chairman, and then just give us the list, because a lot of the data we have to go back and personally ask the county recorders for. So we would prefer to do it in one big ask instead of somebody coming up with another question down the road. So yeah, I'd be happy to take any questions.
Representative Steiner.
Thank you, Mr. Chairman and Mr. Burst. So yesterday we heard from small schools saying that the 3% cap affects a small school's budget much differently than a big school like a Bismarck school district. Do you have that in the counties as well? A small rural county 3% cap versus the large county, Cass County?
Mr. Chairman, Representative Steiner, yes. That's kind of what I alluded to yesterday. The one size fits all is going to be very difficult. As the schools just testified, they don't have, sales tax authority, and they don't have some other revenues. Well, that's a majority of the counties too. Sales tax in a Sioux County will get you nothing. There's no economic development down there. So it's going to be hard to figure out for you. I really appreciate what you're going to try to do here. It's going to be hard to package that in one easy solution. But again, we're going to be here to try to work with you. That said, some of the larger counties, of course, have more demand for services. So Cass County, I think, sent in a letter to you. Of course, they have more growth and other revenue sources, but you have a large task in front of you.
Anything else?
So again, Mr. Chairman, we care about all the bills you hear, but I'll just be hanging out in the back if that's okay. Okay.
I think we'll let it slide this time.
Okay. Thank you, Mr. Chairman. I appreciate all you guys do. Thank you.
Yeah. Further testimony and support.
Mr. Chairman, members of the committee, Matt Gardner, Executive Director for League of Cities. I think you heard our testimony yesterday. As the sponsor said, this bill is very similar to the one you heard yesterday, 1176. I want to save you the time and effort on both of our parts to have to give that testimony again. So we're here, answer questions. Probably echo what my colleague in the county said. We want to provide information, want to be part of the process. If we're able to get a list of that information, we can work together and provide that for the committee. So, Mr. Chairman, that concludes my testimony and can answer any questions that you didn't get me with yesterday.
Well, I don't see any.
Okay, thank you.
We'll have you raise your hand, though, the next time that you want to say something out there, though.
Okay, we can do that.
Further testimony and support.
Mr. Chairman, members of the committee, I'm Pete Hannibut from North Dakota Farm Bureau. Like the others, we obviously want to be a part of the solution. This would reference the part of our policy that talks about budget process reform. Obviously, we think this is a good idea. I won't belabor the point. We had an awful lot of discussion in the last few days. I wish some of those other people were still here today, but at least some of us are. So like the idea, don't know about the details, want to be part of the solution. Thank you for your time. Happy to stand for questions.
Thank you for your testimony.
Thank you.
Further support?
Good morning, Chairman Headland and committee members. Larry Severson, North Dakota Township Officers Association. As I said in my testimony on 1176, we do support property tax reform and relief. We see the need for it. We have some issues with the cap provisions. I just wanted to point out that when the township turns in their levy to the county auditor, that is already the product of an election. Our annual meeting is an actual election. We post a notice in the paper that the township is meeting, and the electors have the ability to make motions on the budget, and they have to vote to pass it. In 1168, I do appreciate the change to the 5-year period for an excess vote to stand. That's much better than doing it annually. That does agree with our requirement for an excess levy in the township is also a 5-year project. So that would fit quite well for us. I'd take any questions you may have.
Questions? Representative Porter.
Thank you, Mr. Chairman. Mr. Severson, do you have to be a resident of the township in order to vote?
Chairman Headland and Representative Porter, yes, you do. It is like an election in a city. You have to be a resident to vote in your city.
Anything else? Thank you for your testimony, Mr. Severson. Further
Thank you.
testimony and support? Anyone else? Seeing none, is there opposition to House Bill 1168? Any opposition? Well, I don't see any. I don't see any online. Questions for DPI or tax department on the bill, committee members? I don't know if they're even here. We'll go ahead and close the hearing on House Bill 1168. Committee members, we're running just a little bit late. We will open up our next hearing scheduled at